Hi guys, Marissa Schultz here, author of The Rise High Investor. Thanks for tuning in to one of my little weekly updates. Today I am talking about mitigating your risks as a property investor. So obviously I love property investment. I come to you each week talking about property investment. I think it's a great way to build wealth over the long term. And I think there are a lot of positives about it. But as with any investment vehicle, property investment does have its risks. So what I want to talk to you today about is what are the risks, the big risks, and how can you protect yourself against them and mitigate those risks. So let's talk about risk number one, changing interest rates. So obviously as a property investor, one of your largest expenses is the interest expense on your property, your investment loan over the properties that you've purchased. Obviously, we are in a really low interest rate environment right now. There is a risk, and it's a real risk, that interest rates will increase in the long term and all potentially in the short term. The truth is nobody really knows when interest rates are going to change. So you need to be prepared for that. So let's talk about how we're going to mitigate this risk. Well, firstly, there are options for you. There are options like entering into a fixed rate loan. So if your cash flow is quite tight and you're thinking, okay, well, I can only just afford my loans right now, but if they did go up a couple of percent, I would be in trouble. Well, then talk to your mortgage broker about locking in your interest rates so that at least you know that you've got that guaranteed interest rate and you can sleep at night knowing that that's not going to change for a set period of time. The other thing I always encourage people to do is when you are doing your cash flow calculations, build in a buffer. So if you're planning to buy an investment property, don't base your cash flow calculations on what the current interest rates are. Base it on what it will be when the interest rates go up to, 6, 7, 8%, which is more of a normal interest rate range for interest rates in Australia. So actually build in that buffer in your calculations. So just a summary, changing interest rates, make sure that you've spoken to your mortgage broker about fixing some of your rates. And I always think that if you've got a big portfolio and a fairly significant amount of debt, it is good to have a strategy to have part fixed, part variable across your portfolio. So keep that in mind. And also make sure you're building in that buffer and considering the future, knowing that interest rates will increase from where they are now. Let's talk about risk number two. Risk number two is bad tenant. Obviously, we've all seen these current affair programs where you've got the tenants that trash the house or do a runner without paying rent. It happens, okay? Let's be real. That is a possibility if you are a landlord, that you will have a bad tenant in your property that will either damage the property or will default on their rent. This is why it's so important to have landlord's insurance. I get so concerned if I ever hear of a property investor who does not have landlord's insurance over their property, because it's not an expensive insurance policy to get, and it's so important, and it will cover you for rent default, it will cover you for tenant damage. So it's really, really critical that you get a good landlord's insurance policy in place. I also think that a property manager is a really good resource to have on your side. A good property manager should be able to manage the situation well when it does arise. A good property manager will hopefully help with tenant selection. Even if they're a great property manager and they've really gone through a thorough process in tenant selection, the tenant can still turn out to be a bad egg. But at least if you've got a good property manager in place, they'll know exactly the steps to take and the way to handle the situation to get it resolved quickly, to maximize your insurance claim, and to ensure that you can start collecting your rent and get the property up to speed as soon as possible. So make sure you're protecting yourself from bad tenants with a good property manager and a good landlord's insurance policy. Next risk is long periods of vacancy. We're pretty lucky in Australia. We've got a strong economy. We've got low vacancy rates across all of our capital cities. So it's not really a huge risk that there'll be huge periods of vacancy unless you're pricing your property out of the market. So if you are experiencing vacancy exceeding 2 to 3 weeks, maybe you need to talk to your property manager about reducing the rent that you're asking for, so try and bring it back to market and try and attract more tenants. It's sometimes better to just get a tenant in there earlier and shave $5 a week off the rent than to have it vacant for longer than it should be. So I think that that's a really good thing. So once again, having a great property manager is really important in that respect. And it's also really important to make sure you're considering location when you're selecting your property. You know, is it a location where there is going to be a high demand from tenants? Is it a location where there's a lot of tenants, you know, looking to live in that area? So, you know, when you are, you know, looking to purchase a property, make sure you're looking at that as a consideration so that you can mitigate that risk long term. Okay, and finally, the last risk I'm going to talk about is obviously changes in your personal circumstances. So none of us know what's going to happen tomorrow. The future is unclear, you know, and it is important, especially if we have dependents or loved ones that rely on us, that we are protecting ourselves and our family in the case that you maybe can't work anymore or something changes in your personal life that will impact your financial position. So there are insurances that you can get, like life insurance, trauma, income protection, and these are insurances that are really worth considering, especially, as I said, if you do have dependents and people that rely on you financially. If your income is a requirement to keep your property portfolio moving forward, then I would definitely be sitting with a financial planner to discuss your insurance needs and make sure you're setting up some insurances in place to protect you in case, you know, unfortunate circumstances arise in the future. So they are my tips for helping you to mitigate your risks as a property investor. If you follow these tips and mitigate your risks, I'm sure that you'll have a very fun journey as a property investor and feel very comfortable and be able to sleep at night quite well. I hope that you've enjoyed this video and got value out of it. As a thank you for watching, you are able to hop onto the website risehighinvestor.com.au and get a 50% discount off of the purchase of the book. You just need to enter the code video 2018 when you go to purchase the book. I also am happy to take any of your questions or comments, and my direct email address is propertyinvestor@risehigh.com.au. Thanks to all of you who have been sending me emails to date. I really love hearing from you. And that's all I have time for today. I will see you next week. Have a great week. Thanks. Bye.